Welcome back to the Rebel's Edge. Pete and I are both in our usual perches for today's show, and we're going to bring you exactly what is going on with the worries about inflation, Kevin Warsh, Nvidia, and a whole lot more on today's Rebel's Edge. Bang. Good to be home, right, Pete?
It is. It is. That was a long trip for me too, John, because I extended it by seeing my grandkids. But yeah, I'll tell you what, it was a fun weekend, though. There's no doubt about that.
Yep. Special hello to all of the folks who are at 10X Wealth. And there were a lot. I mean, that room was packed, Pete. I don't think Grant could have put another body in there. And a lot of enthusiastic folks. We got to show them some of the new behind-the-scenes stuff that we'll be sharing with all of you very soon about the trading platform we've got, all the signals and everything incorporated, as well as social media. Bang. But today's Rebel's Edge. So we're going to instead tell you a little bit more about the markets.
Yep.
And we're not going to spend the whole first half hour, because that's pretty much the whole show, on macro. But we are going to hit macro. And Pete, I'm going to say macro today is really Treasury yields. Wow. 19-year highs. The 10-year and 30-year near cycle highs. That's why we're going down today, folks, because people are worried about the bond vigilantes being right. And that means, of course, that Kevin Warsh and the Fed, because he's going to be sworn in this week, are going to have their work cut out for them in terms of pushing back on inflation, Pete.
Yeah, it's going to be tough for him. There's no doubt about it. It's unbelievable. Like you just said, I mean, the interesting thing is just how fast this has occurred, because, you know, we're talking about the example I'll use is the 10-year, where, you know, we started the year at what, 4.1? We actually went below 4 at one point in time, and now here we are at a 4.68. That's a pretty big run to the upside. That's got people a little bit concerned, I think, from the standpoint of what will the Fed do? I mean, you know, there's people out there, John, not you, not me, but there's people out there that are talking about forget cuts. They want to raise it. So who knows? You know, that whole thing makes it very, very interesting. But the move that we have seen to the upside, even though it doesn't sound like it's just, you know, flying to the upside, you know what? In terms of the 10-year, it kind of is. And that's been a pretty gigantic move in a short period of time.
Yeah. And a lot of you are probably thinking, well, if the market's down 300 points for the NASDAQ, we're probably seeing the VIX spike. Right, Pete?
That would be their guess. Yeah, you know, the interesting thing, John, is it has been in these ranges, right? And when it's found a range, it seems like that's where we stay for a little while until we get to the next range. And as of right now, we're sitting in a range that's somewhere, call it 1760 up to about 1830. That's kind of the range of late or whatever. Last 4 or 5 days, we look at different things and we see that. But it's interesting, you know, it's really interesting because when you look over at the S&P, and the S&P is up, you know, fairly significantly now, but not enough to even warrant the fact of that it should be much over 18, quite frankly. So it's interesting to see where we are. You know, a 1% move on the S&P, like you and I always talk about, John. That's something that, you know, we'd be looking for, but we're not seeing quite that big of a move, and because of that. It's interesting to see where the VIX is right now. It's holding what? Right around 18s, the low 18s or something like that. And that's kind of where we've been planted today, and we've been sort of in that area for a while now.
Yeah, a lot of you would think that, wow, with the NASDAQ down 284, which is 1%, that would be a 16 VIX, but we're not measuring the QQQ, which would be OVX, or rather, the VXN, Pete. Instead, we're measuring the VIX, VIX, which is the S&P 500. And the S&P 500 hasn't moved 1%. It is down 0.7%. So we're actually higher than we should be. That little extra that they push in there, that's because of people thinking maybe we will start seeing a little wider swings here and there, Pete, out of the S&P 500. But again, VIX, it tracks the S&P 500, and it does so by taking a look at calls and puts and measuring how much the premium in there is moving. And like Pete said, a 16 VIX, which happens to be the square root of 256, folks, that's how many trading days there are in a year. 256, not 365, because as you guys know, we close on weekends, we close on holidays, so we don't get 365 days for the VIX. So anyway, that's kind of a long-winded explanation for how we are not seeing that very, very significant pop in the VIX. Instead, just kind of like muddling along around that 18-ish level that Pete described. All right, Pete. Poly market, I know it's not your favorite because you were hoping that the Timberwolves or Timber Puppies would be in there, but they couldn't knock off the San Antonio Spurs. And for that reason, San Antonio and Oklahoma City, OKC, are the two teams in there. But as you can see, they are in the prediction market world picking almost dead even, Pete. I mean, 41% of the money is on Oklahoma City Thunder. 38% of the money right now is on San Antonio Spurs. And if you guys have watched, that is a very good matchup because San Antonio has that French kid, Pete, that's what, 7'5", or whatever he is. And he's a beast. And as good as Pete's pal is, Holmgren over on OKC, it's a pretty interesting matchup.
Yeah, it's tough, and they're using all kinds of different defenses against him, John, as best they can to try to figure him out, right? And that's what's going on. When we come back to the poly markets, it kind of makes some sense. Now, let's be honest. I don't think that OKC has lost a game since sometime in April, by the way, just, keep everybody on their toes. So losing last night in overtime, and we'll talk a little bit about that with sports later on, but it gives you a little bit of an idea that, it's a home game for OKC, and they lost it. It took 2 overtimes, but they did lose it. So it's going to make it that much tougher. Now, a game one does not predict the entire the whole run that you're going to be making, but it's a nice start for San Antonio. There's no doubt about that. They played extremely well. Wembley was unbelievable with 41 points. So I would say that the OKC's got the work cut out for him on this one, John. And the fact that it's almost a dead heat, really, really interesting because it was a long ways from that not that long ago. So we'll see if things change a little bit, if OKC can steal a game from them.
Yeah, I mean, look at that chart, folks. Right at the tail end of that chart to the far right, you see that it was, significantly higher. We were up around 50% for OKC, and only, in air quotes, only or scare quotes, about 26% for San Antonio. But that loss, Pete, has flipped it, and they're practically touching right now. So very, very interesting. If you're a sports fan, you like that. If you're a fan of either city individually, you're probably not happy. If you're an OKC fan, really happy if you're a San Antonio fan. All right, well, we've got a little small cap spotlight, Pete. And small cap spotlight, folks, we love to share with you stocks that are small caps, as the name implies. And in most cases, these are companies that Pete or myself and or Mark Lepresti are involved in as consultants. In many cases, we are paid to be advisors to these companies. And we like sharing them with you because if we're putting our money where our mouth is and we're being paid to be part of these, we think you guys, in many cases, would like to at least know that and perhaps follow along with us. It's not a recommendation. What it is, again, just like with Polymarket, we think when people put their money where their mouth is, those are the people you want to follow. And ZSQR, or Z Squared, is a company that is now AI infrastructure. And for those who aren't as familiar with what that is, that means data centers, folks. And they're on their way to 100 megawatts of data centers. And when I say on their way to that, they've already got a lot of megawatts. And they're doing a deal right now. Basically, they signed a binding letter of intent to acquire SkyCore, which will give them, through Duke Energy and so forth, 24 more megawatts of energized capacity. And why is that important? Well, on your way to 100, you got to, keep boosting it up like they are. But in many cases, folks, it takes years to get these service contracts from the utilities. It also takes years in many cases to get the permitting necessary for these data centers. So luckily, Z-Squared, which was basically virtually debt-free balance sheet following their listing on the NASDAQ Global Market, which we detailed. And as you guys can see from some of the videos, we were some of the folks helping them ring that closing bell just over a week ago, maybe. And it was fabulous. There we are there over with Z-Squared. Maybe it was 2 weeks ago, Pete. We've rung so many bells this year, folks, almost as many bells as Pete used to ring playing football. But these, the companies, when they get to ring a bell at the NASDAQ, that's a real red letter day for them. And for us to be able to attend it with them. So ZSQR, great company in the data center space for AI, and this new deal with SkyCore that they announced today is why that stock is moving up by about 6% today, Pete. And nice. I think there's a lot of positives about the company. I'm sure they'll have more to announce. They've got a wonderful CEO, Michelle Burke, who I was lucky enough to be talking with at the NASDAQ. And of course, we're going to interview her very soon and get even more information out there to all of you who, again, like to follow us in these investments that we make and that they make with us by helping us bring their story out to the masses. So great company, Pete. ZSQR, hey, Michelle, hello out there. Hello, Jim. Hello, all the folks at ZSQR, Z-Squared. Check it out, folks. All right, Pete, let's dive in a little deeper into ServiceNow.
Yeah.
And, well, it's kind of an interesting pivot because these guys, strong rebound in the software sector, and this one has been on fire, Pete. Last Thursday, it was an $89 stock. That was last Thursday, folks. You can see it right there on the graph that Jared just put up there. Now it traded today through 109, I think, or something, Pete. I mean, just on fire. And it's because they've made a bit of a recovery. People are looking at them saying, man, ServiceNow looked like it was way too cheap for a while. And they're right out there with players like Salesforce, Pete. And I know Benioff and Salesforce are always ones that you focus on.
Yeah, absolutely. And these guys are killing it, John. They're doing an outstanding job. They had struggled, and now all of a sudden they've just absolutely taken off. I mean, they're also, all you got to do is take a look at that whole sector, John. And if you got the IGV, that gives you a little bit of what I'm talking about. It's a software ETF. It's gone from 84 to 94. I mean, that's a big move when you're talking about ETFs to kind of make those kind of moves. So they've got all kinds of different new strategies that they're talking about and expanding the AI strategies that they've got. They're talking about demand being very strong, and that's driving them. They recently were at an event, the Knowledge event, that gave people even more inside look at what's going on with ServiceNow. So, the stock itself today is kind of right now at least a little bit flat, but it's already been making these pretty incredible moves to the upside, John, and it makes a lot of sense. I think when you're talking about the rebound in software, one of those software names that you want to point to is ServiceNow, no doubt in my mind.
Yeah, and folks, ServiceNow, again, with the unusual activity that we saw in there when the stock was 88 or 89 bucks, that was fabulous. But as always, Pete and I can't trade for any of you out there. But what we can do is say, use some discipline. Mm-hmm. I mean, when it goes from 89 to 109, it actually opened at 110 today, Pete, before coming back down to unchanged. You don't want to chase it all the way down. you'd rather be saying, you know what, I'm not going to be a pig. I'm going to take some off the table here. I'm going to take a little more off the table here. And then as it starts to fall and goes back to unchanged, you're not saying, dang it, I missed it. I mean, you still have a very nice gain from 89 to 102. Don't get me wrong. But if you wanted to have that lock in that nice big fat chunk, you got to be disciplined. And that's why Pete, my brother, came up with that expression DDA, which stands for, Pete?
Discipline dictates action. So
that's right.
And John's exactly right. You have to follow through. I mean, it's great to have a stock that you got everything right, and now it's moved to the upside. There's still a decision to be made, and you've got to understand that. And hopefully you will use the disciplined style of trade because, options are a different bird, right? I mean, there's a time frame with options as opposed to stocks. And so because of that, there is a little bit more of a time that you need to react. And I think you need to react, and everybody's going to have their own deal, whatever that is, but you got to stick to that.
Yep. You got to be disciplined, folks. If you're disciplined, you'll be at this game a long time. And if you're not, then you'll probably be better off just owning an ETF like the SPY. But if you want to catch, some of these big moves and get 100%, 200%, 400%, or even 10x, got to be disciplined. All right, Pete, let's look at SAP, big German software giant. And a lot of people see, golfers on the Pro Tour and so forth with SAP on their hats or whatever it might be. Well, they just hit a 4-week high today, Pete, the highest level since basically a year ago. And it's been gaining momentum. European stocks are doing better, but this one's leading the charge, Pete. And against a negative backdrop in America for a lot of these software names, this one is actually printing some really nice profits. And not that the others aren't, but I mean, that move, when you see it from Thursday last week, Pete, all the way up here to where it got to today, pretty incredible.
Yeah, these guys are talking about autonomous software, John, and they're saying all the right things. And I'm not saying that they're just blowharding. I'm just saying they are positioned really, really well to start maybe making a comeback, because this is a stock that in the last 52 weeks, I think it's been as high as over 200, 236, I think was the number. So, they've got a long way to go to get all the way up to there, but they're up about 5% today. And I think that they are doing and showing people what they're able to do. They're doing it very, very well. And I think they're getting the message out there. And that's why the stock is looking the way it is today. Does it mean it goes straight up? Absolutely not. It's probably going to make some very, very strong moves to the upside, some pullbacks, and then more strong moves. But impressed with what they're doing, John. And, again, they talk about the AI agents and all the rest of that, which is great. And I think that's what's going to propel them even higher. But not everybody has embraced that yet. So we'll see. But I think they're in the right place at the right time still.
How about Agilysys? Right place, right time, Pete. 17 consecutive quarters. That's what these guys just did, folks. 17th consecutive record revenue quarter. I mean, if you look at this one, they reported almost $83 million for their Q4 and an all-time high of $319 million for the fiscal year. Agilysys is basically hospitality solutions for cruise lines, for casinos, hotels. I mean, that is a sweet spot for anybody who's ever paid attention to that space. Hospitality, again, everybody that gets on an airplane and travels to Vegas or travels to Miami or wherever is probably being touched somewhere along the line by something like Agilysys, because this is software that really helps them basically keep up with all of the people that are coming in and out of their doors. So an amazing move. The stock making a very positive upside move today, was up as much as 20% in the pre. It's still holding on to about 13, 14% right now, Pete. And I think overall, whether it's point of sale stuff at properties or whatever, inventories, these guys help those casinos, cruises, hotels do their job.
Yeah, and like you said, John, you started with 17 consecutive record revenue quarters. I've never heard of anything quite like that. That's absolutely outstanding. You got to like that. Their recurring revenue, John, is a monster number. It's 66+% of the total revenue that they've done. They also talk about customer retention, which you can understand why they're able to do things that it doesn't seem like others are doing, or if they are, they're not doing it as well as they are. So there's a lot of reasons to like this one. Yeah, the last time I looked at it, not too terribly long ago, it was up about 15%. When you're up that much, it's going to start moving around. There's no doubt about it. Some of the people are going to want to take some off. Others are going to want to try to figure out how they can get in. But yeah, up about 15%. This cloud-based deal, these guys are absolutely crushing it. I don't know that I've ever seen anything quite like some of the numbers that they've been putting up, John. Like when you were talking about all-time numbers, I mean, that's just amazing for companies that have been around for a while, right? I mean, so really, really impressed by what these guys were able to accomplish in the previous quarters, but specifically this quarter.
And we knew, Pete, that retailers were going to be part of the story this week. They're not the biggest story. That'll be part that feeds into what we talked about top of the show about inflation and consumer spending, consumer discretionary spending, and so forth. Has that been crimped by what's going on with higher gas prices and so forth? Well, Home Depot was one of those stocks, one of those retailers that we were saying, you know, they could be a canary in the coal mine. Walmart could be a canary in the coal mine, meaning that, you know, coal miners used to carry a canary, believe it or not, folks, down there into the mines. And if the bird passed out, they'd know there was too much gas down there and they better get the heck out. Well, you know, the same sort of thing goes on with the markets. And if Home Depot had a whoops, and if Pete Najarian didn't buy as much mulch as he usually buys to throw around on his garden or whatever, and probably a lot more than just Pete, but he's probably the single biggest customer of Home Depot in the whole United States. You haven't seen his property, folks. But you'd likely bet that if they were feeling a pinch, Home Depot would be showing some pretty negative results. And as you can see, the stock was down about 14% year to date going into the number, but actually after it got down there to 300 or so, Pete, it bounced and held at that level. So they're betting that some of the damage, if you want to call it that, from that slide is over. And maybe the stock, just like perhaps we'll hear out of Walmart and the rest of the retailers this week, perhaps the worst is behind them, and looking forward, they're feeling a little better. What do you think?
Yeah, I was breaking this one down big time, John, just because I'm there a lot. You were just talking about that. And, you know, whether it's mulch or whether it's black dirt or whether it's whatever, I'm always doing something. It's one of the things that it just gives me my freedom, the way I feel. But you know what? They beat on the earnings. That was impressive. Their sales numbers were up pretty good, John, up like 5%. So they hit what? A little over 41 billion, 41.8 billion. That's not so bad. But there was one area that there was a little bit of concern. And I think that's why, because when I first saw the numbers, I'm like, God, Home Depot's probably up like 6-8%, something like that. And I come over and I look and it was pretty much flat as a pancake. So I was wondering, well, what's going on here? They are very resilient, but you know, they've got to deal with a few things, John, and people with big projects are kind of holding back a little bit for probably some of the right reasons, right? I mean, they're going there like I go there to buy specific things, but they're not really going by to even more specific things. So they were talking about the comp sales themselves missed. And because of that, that was the one, if there's any negative, that would be the one negative that I did see there was, you know, just a little bit cautious about, you know, big time things that people are going to be doing at Home Depot, the high ticket items and so forth. So that's probably the only reason why it's not up 4, 5, 6, 7% today, because they did a really great job. And when I've been there, John, it's been pretty packed. But, you know, it's always difficult to, you know, get all the information you want. I actually talk to the people when I'm there, asking them how things have been and what are they seeing and all the rest of it. But, Yeah, I guess that's the one thing that's kind of probably the negative. And this was a $436 stock not that terribly long ago, within the last year, and here we are. You were just talking about it, struggling down there a little bit around 300. So you know what? They're going to have to find something, which is a lot different than the Walmart side of retail and some of the other retailers that are out there, John. They don't have those kind of issues that I think Home Depot's got. So that's the only reason that I could see why the stock's not doing even a lot better. But I did like the numbers that they did put up. They put up some pretty damn good numbers. The beats on the revenue, the beats on the earnings themselves, pretty impressive considering the gas is $4.50 a gallon and this and that and everything else. I think Home Depot's doing very well.
Well, let's maybe take a look, Pete. And by the way, folks, tomorrow we will be covering a preview of Nvidia's earnings, because that's the really 800-pound gorilla this week. It's going to affect Broadcom. It's going to affect Micron. It's going to affect AMD. I mean, there's so many stocks directly that it will affect. And then, of course, it'll have a carryover effect depending how good, or if they have any warning, because I don't know what they're going to put up tomorrow yet, Pete. I'm very confident to hold Nvidia, but I own it through calls and call spreads. So, the nice thing about that is if the stock's down 4%, 5%, if you're in the stock when it's a $200 stock, that's a problem. If you're in the options, it's a couple days worth of digging before you're right back to work again, because you're not experiencing that same $10 or $15 loss for every share you've got. Anyway, let's look at a little Joe Burrow tape, shall we?
Yeah, love it. Let's do it.
We know you guys love these videos, and I think you'll like, even though you might not appreciate Joe's fashion sense, you probably, and Pete knows the Burrow family a little bit, so I'll let him talk about it.
I've been told I wasn't good enough since recruiting.
He had an older brother
junior year of
playing
high school
at Nebraska. And Nebraska still
they
didn't.
told me I wasn't good enough. And Ohio State was really my only big-time offer.
He's our backup quarterback going into, I believe it was 17, and he broke his hand, non-contact injury, right before the first game.
There's this guy, Jerry Burrow, he can't fucking hit a side of a barn.
He's a bomb. He's quarterback.
This guy, what are you?
Yeah, what year?
This guy's out of Ohio. He thinks he's, Ohio State boy.
He's a baller, man. Those guys were nuts.
No,
They
I wasn't
missed
good enough
out.
for that. Maybe some guys, but not me.
Fortunately for Joe, he found a coach who would change his career.
I didn't play for 3 years.
No, he did.
On me. Not knowing if I could play or not. Forever grateful for you.
So I remember
Probably one
all
of
the
the
Elite
best
11 guys that got chosen over me.
one-year
So I
players
remember all
in
that
college
stuff. I keep a mental
football,
log of it.
especially quarterbacks in college
I
football.
think that's just
Won
who
the
I am.
Heisman.
You can accept
Couldn't see in the
fact that
field.
People are saying those guys are better than you, or you can just keep working. That's what I did. I knew I would be at this point. That's exactly what happened.
Yep. I mean, the man is,
I've been told
and
I wasn't
Pete,
good enough.
if they would have surrounded him with the sort of things that I think they're surrounding Mendoza with in Las Vegas, I think this kid would have already won some Super Bowls.
Yep.
But they didn't. That's not his fault. He's got some good receivers, Jamar Chase and some of those receivers, freaking ballers. But you got to keep the quarterback from getting hit every play. And, the kid's tough. So I love him. And like you said, Pete, sat out 3 years. 1 year he played and won it all. And, that's, Ed Orgeron gave him the shot down there at LSU. And, Ed Orgeron probably doesn't get credit for enough, Pete, but that guy was a force down there until they forced him out.
He's been sacked in the NFL over 200 times as a quarterback, John. I mean, it just shows you that you want to talk about resilience. You want to talk about a guy who plays when he's clearly hurt, because that's who he is and all the rest of it. And he's about as likable a player that you could want to see the best for out there, because the guy puts it all into every single game. And he dresses like a goof. Who cares? It's kind of fun, I mean, that's what people do now. You watch WNBA and the NBA and whatever you watch. They all come in some hokey outfit, that they probably wouldn't normally wear, but that's the thing to do. And Joe plays along with that pretty easily because he's a pretty colorful dude, man. He comes from a big family of football players, and he is, by far the best of the family, but it is amazing. His older brother played defensive line at the University of Nebraska, was a hell of a player. But this guy, he was way past hell of a good player. I mean, that's why he was a Heisman Trophy winner. All right, John, NFL, since we're right there anyway. So the draft has become such a big thing. It's not quite the Super Bowl, let's be honest, but it is so big. And you and I have talked about this time and time again. Obviously, when it's come around and it's draft time or whatever, wherever it is, this year it was in Pittsburgh. Well, they only had 800,000 plus fans were there, John, over 3 days. They only had 13.2 million viewers watching it. So, to say that the draft is a big deal in the NFL is not even really saying enough, because it's a really big deal. And the Minnesota Vikings really pulled off something pretty good. It really isn't the Vikings. It was the Minneapolis League, and they came in there and they said, look, we want you guys to bring the draft to Minnesota. And they were like, here's what we can give you. Here's how it's going to go, blah, blah, blah. And, unless something really strange happens, we have the draft here in Minnesota. The 2027 is the Washington, D.C. one. Then 2028, Minneapolis will have it, John. So that's going to be a pretty big deal, because people here are stoked. I mean, Viking fans are like what used to be the Buffalo fans, right? I mean, the Vikings, they've been to Super Bowls. They just never won Super Bowls. And they haven't been to a Super Bowl in quite a while. So, you know what? They're hungry and they just keep waiting. But while we're waiting, by the way, take a guess at what the estimates are for not the Super Bowl, but for the draft. What do you think the estimates are, John, as far as the money that comes into the economy of the region where you are? So probably Minneapolis, St. Paul, and then, circle it out about 50 miles, whatever it is. But what do you think they're these days, the NFL really, they're so big. What do you think they're bringing to the plate as far as the money that they got?
Well, I won't steal Pete's thunder, folks, but I will tell you this. In 2017, in Philadelphia, it was 95 million. In Arlington, Texas, where the Cowboys happen to be, 125 million. And this is restaurants, rideshare, parking, souvenirs, all that kind of spending. How much is it now, Pete, in 2026? And what are they projecting for the Vikings in 2028?
Well, like everything in the NFL, John, it always goes up. It doesn't go down. I mean, the salary cap goes up. Well, why does the salary cap go up? Because TV money has gotten that much better, right? I mean, it literally is just amazing what the NFL really is. And at some point, guys, and I don't know how soon it's going to be, but we will have a team in London. We will have a team somewhere else, probably part of Europe. I don't know where exactly, but that's why they've been playing all these games for so long, is they're trying to do their best. They're trying to do what's going to happen. And by the way, if and when that happens, that's going to bring up everybody to about 10 billion or more in value. Whatever, it's just amazing what the NFL really is.
Well, let me throw this out, Pete, because I grokked it when you put this up. And Detroit, 775,000 fans.
Wow.
And it generated $215 million in economic impact. That was 2024.
Wow.
Now, 2025, 2026, I don't know the absolute numbers yet, but we know in Pittsburgh they had a ton of visitors, and they already are estimating over 200 million in economic impact for Pittsburgh. And the Vikings, Washington and then the Vikings, going to be bigger.
Yeah, I think so too. But the number that I was, given by the Minneapolis group, 100 to 200 million. So I think that they really were playing that down a little bit, because I'm with you, John. I would say 150 to 250, maybe 300. I mean, it really could be that big. I mean, that's why these guys fight for that draft, because it's that big. I mean, the fact that they had 800 and some odd thousand fans there, John, in Pittsburgh this year, I mean, that speaks volumes about this thing. All right, real quick, NBA. It tipped off last night for 2. They're down to 4, but this is going to be pretty daggone interesting, because we're sitting here with San Antonio. San Antonio had to fight pretty hard to get through the Timberwolves, but they did it, and the Timberwolves just didn't have the right answers for them. But OKC, all they do, John, is win, right? I mean, you got to go back, like I said earlier, all the way to April for the last time they lost. They had a 4-0 sweep. They had another 4-0 sweep. They're at home. Things are not going well. They couldn't shoot worth a damn. I mean, I watched a lot of this game. They just struggled. And you know what? It's really too bad. SGA, he was here's his numbers: 7 for 23 for field goals. You're probably, if that's your best player, and it is, he is the MVP of the league, I would say. I don't know, if he can't get it into the bucket, that's a real problem, right? And it was a real problem. Meanwhile, Wembley is just taking care of business down there. 41 points. Now, they did have 2 overtimes, so that kind of helps that go up even better. But he was playing his tail off. But I'll tell you what, if you watch the game at all, the guy that stuck out more than anybody is Alex Caruso, because this guy flies around everywhere, John, and all he does is he does the right thing. And I took a look at his stats. How about this for a stat with him? In the playoffs, or the postseason, I guess we'll call it, in the postseason for the NBA, his numbers all go up. His shooting percentage goes up. His three-point goes up. His rebounds go up. I'll tell you what, that's a guy you want on your basketball team. You want him on your football team. You want him wherever you are, because he is pretty amazing. But you know what? Congrats to San Antonio for a really well-fought victory that they had. Wembley played absolutely lights out, and it's going to make it a little bit more interesting, I think, John, with Chet Holmgren and these guys. They're going to have to step it up, and SGA cannot have another night like that, because he is the Michael Jordan of his team, right? I mean, he's the best guy out there on the court for them, and the guy just couldn't get him to drop last night.
Yeah, you can't have him shooting, percentage-wise in the 20s.
Yeah.
Not when he's getting the ball as often as he's getting it and putting it up and having it not fall. That dog doesn't hunt, as they say, Pete, because, again, if just a couple more of those drop, it's not a 2-overtime game.
Right.
It's OKC and everybody talking sweep. But that's why that chart we showed in the beginning had OKC coming down and being met right there with the Spurs. So we'll keep our eye on it.
Yeah.
And we'll also keep our eye, folks, on the earnings that are coming our way tomorrow after the bell. We'll have a great preview for you for Nvidia. So make sure you tune into the Rebels Edge tomorrow, because Pete and I will be covering it wall to wall about what the smart money is doing going into those earnings. So if you want to know, you got to tune in at 1 p.m. Eastern time tomorrow. Right, Pete?
That's right. We'll get them. Giddy up. See ya.
Bang.